Oil prices are down slightly on Friday amid a U.S.-led effort to have major economies open up their emergency reserves. It aims to bring down the price of the commodity, partly by offsetting Russian fossil fuel shipments affected by Western sanctions. The International Energy Agency is meeting later on Friday to discuss the coordinated release from its stockpiles. Earlier this week, Washington said the U.S. would release 1 million barrels of crude a day for the next 6 months. That's the most the U.S. has taken out of its strategic petroleum reserve, which in the past has only been tapped after natural disasters.
This is a wartime bridge to increase oil supply until production ramps up later this year. And it is by far the largest release of our national reserve in our history. It will provide a historic amount of supply for a historic amount of time.
Now, for more on the story, let's go to Craig Erlam. He's a senior market analyst at OANDA in London. Welcome back to the program, Craig. Now, can you tell us what kind of effect this is going to have, this move by the U.S.? Because the last time around, it was really more of a symbolic gesture, wasn't it?
It was, and it was a much smaller release as well. This release, as you say, it's 1 million barrels a day. It totals around 180 million barrels in total. It's around a third of the entire US SPR. So this is quite a considerable move, and it comes at a time, obviously, when Russian supplies are disrupted. So we're not going to be talking about $80 oil as a result of this move, but this certainly goes some way to filling the void left by the supply disruptions that we're seeing and creates a little bit more balance in the markets. And if that coincides as well with similar releases from other countries, then that could have a far more significant effect again.
Now, can we look at what Russia is doing with its natural gas exports? It's going ahead with its plan to only accept rubles from unfriendly countries, so mostly in Europe, that are going to be affected. How ready are Russia's customers in the European Union to comply with this directive from the Kremlin?
Well, I mean, ultimately, it's going to come down to contracts. It's going to come down to the technicalities involved with these demands and how they wish to pursue it. And then it's going to come down, obviously, to how it's enforced as well. So this is going to be an extremely difficult procedure unless there are technicalities that allow, for example, for the payments to be made in euros and then converted into rubles later on. It depends how this is ultimately going to be enforced. I think Europe still has the ability to, has a buffer for the shorter term, and we're going into a period, unlike the winter, when natural gas is less in use and when we're typically seeing stores being topped up. So there is time, really, for Europe to search for alternatives, but there is going to be no replacement. If this becomes a longer-term problem and Russia refuses to supply and Europe refuses to accept demands, then it will become an issue because they simply can't replace the levels of gas that Russia currently supplies to Europe.
All right, a big problem for the European Union. Craig Erlam from OANDA in London, thank you for joining the program.